Imagine for a moment that it is early in the year 2026. You wake up on a cold Tuesday morning, and the first thing you do is check your bank balance on your phone. You see the exact same numbers that have been staring back at you for months. Nothing moves, nothing grows. And as the cost of groceries, insurance, and utilities continues to creep higher every week, you begin to wonder why you feel like you are standing still while the rest of the world is moving forward. You hear people online talking about building massive wealth, compound interest, and total financial freedom. But to you, it feels like your money is trapped under a heavy rock. You are working hard, you are saving what you can, but the needle just is not moving fast enough. Now, I want you to picture a completely different scene. Imagine you had started a specific, deliberate sequence of steps just 2 years earlier. Not by guessing, and certainly not by following the latest risky trend or a random stock tip you saw on the evening news, but by following a smart, logical order that made every single dollar work like a tiny, dedicated soldier fighting for your future day and night. The difference between those two versions of you is not luck. It is not about having a high intelligence or a special talent for math. It is simply about the sequence. The right sequence turns total confusion into absolute clarity, while the wrong one keeps you struggling in the dark without you even realizing why. Today, I am going to walk you through the exact 20-step sequence that makes sense for the complex world we live in now. This is the smartest way to invest your money in 2026 to ensure you are better prepared than 95% of the people around you. Step 1 is to build your foundation with a real financial oxygen mask. Before you even think about opening a new investing application or buying a single share of stock, you must build something that most people still avoid because it feels boring. You need an emergency fund, but not just a small amount of cash sitting in a jar on your counter. This is your personal financial seatbelt that allows you to invest with total confidence instead of constant panic. The truth is that you cannot invest well when you are scared of your next bill. When life surprises you with an expensive car repair or an unexpected medical bill, you will be forced to sell your investments at the worst possible time unless you have this foundation. Aim for your first $1,000 as fast as possible to stop minor problems from becoming major disasters. Then, slowly and steadily, build it to cover 3 full months of your actual living expenses to create real emotional calm. Step 2 is to eliminate high-interest debt before it eliminates your progress and your spirit. If you are carrying debt with an interest rate above 8%, your money is not working for you at all. It is working for the bank, and they love every second of it. Think of this debt like trying to fill a bucket that has large, jagged holes drilled into the bottom. You can pour water in all day long, but the level will never rise because the leaks are too fast. Paying off a 22% credit card is exactly the same as getting a guaranteed 22% return on your money, which is something even the best investors on Wall Street cannot do consistently. Step 3 is to capture every single dollar of your employer match while you still have the chance. This is the only major exception to the pay debt first rule. If your company offers a retirement match, you must grab every dollar because it is the closest thing to free money you will ever get in your life. If you put in $100 and they add another $100, you just doubled your money instantly before the market even moves an inch. Step 4 is to open and maximize your individual retirement account, or IRA, for 2026. Now that you have your safety net and you are attacking your debt, it is time to take real control over your destiny. In 2026, these accounts allow you to pick low-cost index funds that keep more money in your pocket instead of paying high fees to a wealthy broker. By using an IRA, you are choosing a path where your money grows without being eaten away by unnecessary costs. Step 5 is to use a health savings account, or HSA, as a secret wealth-building tool. Most people in 2026 still do not understand how powerful this account truly is for their long-term future. It is not just for paying for doctor visits or prescriptions. Your contributions are tax-deductible, your investments inside the account grow tax-free, and your withdrawals for medical costs are also completely tax-free. It is a triple tax advantage that no other investment account in the world can match. Step 6 is to boost your 401k contributions beyond the match once your toxic debt is gone for good. This is the moment where you shift from simply building a foundation to building serious, life-changing wealth. Every dollar you keep away from unnecessary taxes is a dollar that continues working for you every single year through the power of compounding. Step 7 is to prepare for taxable investing the smart way. Once your tax-advantaged accounts are working on autopilot, you can open a regular taxable brokerage account. This gives you full flexibility with no withdrawal penalties, but you must be strategic about taxes and avoid unnecessary trades that trigger big tax bills. Step 8 is to understand the true difference between saving and investing before you make another move. Saving is for protection and for money you know you will need in the next year or two. Investing is for growth and for money you do not need to touch for at least 5 to 10 years. Confusing these two goals is the easiest way to derail your entire plan and lose your peace of mind. Step 9 is to build your strategy before you build your portfolio. Most people start by picking a random stock they heard about from a friend or saw on social media. That is not a strategy. That is a gamble, and the house usually wins. Smart investing begins with deciding exactly how much risk you can handle and how long you plan to stay in the market. Step 10 is to define risk based on what you can actually sleep through at night. If you lie awake at 3 in the morning worrying about the price of your stocks, you are taking too much risk for your emotional capacity. A good portfolio should feel quiet and almost boring, not like a terrifying roller coaster that you cannot get off of. Step 11 is to automate everything so your system works even when you are busy or tired. Automation is the engine that transforms inconsistent savers into wealthy, long-term investors. When your contributions are automatic, your future becomes a healthy habit instead of a stressful monthly decision. Step 12 is to use dollar-cost averaging to turn market volatility into your greatest advantage. Instead of trying to time the market perfectly, which is impossible, you invest the same amount every single month. When prices fall, your money buys more shares, and when prices rise, you buy fewer. Over time, this simple discipline smooths out your costs and removes the pressure of having to be perfect. Step 13 is to create a portfolio that balances growth with stability. You need growth assets like index funds to beat inflation and increase your net worth, but you also need stability assets like bonds to protect you during a downturn. The smartest investors in 2026 find a blend that matches their specific age, their family goals, and their retirement timeline. Step 14 is to rebalance your portfolio so it stays on course no matter what the news says. As the market moves, your original plan will naturally drift away from your target. Once or twice a year, you should adjust your holdings back to your original mix to ensure you are not accidentally taking too much risk after a big market run. Step 15 is to protect your wealth with proper diversification instead of relying on blind optimism. Overconfidence is the silent killer of many great financial plans that took years to build. Do not put all your eggs in one single basket, even if that basket looks very strong and shiny today. True wealth is built on a foundation of many different pillars that support each other. Step 16 is to strengthen your mindset so you do not ruin your own progress with impulsive choices. Investing is much more emotional than it is mathematical. You must train yourself to ignore the dramatic, scary headlines and stay focused on the long-term economic truth. The market has always rewarded those who are patient and punished those who are in a hurry. Step 17 is to increase your contributions gradually as your income grows over time. This is how you fight the danger of lifestyle creep, where you spend more just because you make more. Every time you get a raise at work or receive a bonus, put a portion of it directly into your investments before you even have a chance to see it in your checking account. Step 18 is to avoid unnecessary complexity and stick to what actually works long term. Complexity often feels sophisticated and smart, but simplicity is what actually builds wealth over decades. Do not get distracted by new, flashy financial inventions that you do not fully understand or that promise impossible returns. Step 19 is to stay educated without letting the constant flood of information overwhelm you. Choose a few trusted, calm sources of information and focus on timeless principles rather than daily market predictions. The less you react to the noise, the better your results will be in the long run. Finally, step 20 is to stay consistent long enough for your future to fully unfold. Consistency is the great equalizer that allows ordinary people to build extraordinary wealth that lasts for generations. The real secret to investing is not about being the smartest person in the room. It is simply about staying in the game longer than everyone else. If you follow these 20 steps in this specific, logical order, investing in 2026 will no longer feel like a mystery or a gamble. It becomes a structured and confident process where every single choice brings you one step closer to the life you truly want to live. You will no longer be a victim of the economy. You will be the architect of your own financial future. Your future is no longer an accident waiting to happen. It is a plan that you chose to build with intention, discipline, and clarity. I want to leave you with one very important question. Which of these 20 steps are you going to take action on first? Are you going to build that oxygen mask, or are you going to finally kill that high-interest debt? Let me know in the comments below, because your journey to a better life starts with a single clear decision today. Thank you for watching, and I will see you in the next one.